Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 26th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right now, inside day at the moment, heading into the RTH Open, trading 62% of average range, just 29.75 points of range right now inside Friday's range. Still at the highs of the overall move, which means this week still expected to be a bullish week here. Even if any pullback early in the week occurs, we could be looking for another higher low and go type of situation. And so that could be in play. One thing to keep in mind is we do have another Fed interest rate decision this Wednesday. FOMC statement and the rate decision that will give us another FOMC key level. So that could mean that we could be a bit range bound the first few days of the week heading into that statement and number. For example, right here was the last one in June. This was Monday, Tuesday, and then Wednesday. So we had a rather muted week here ahead of the Fed announcement. So that could be in play again. Over here, this is the FOMC day right there, the 2 days heading into it, plus Wednesday there. Very, very quiet. So keep that in mind heading into this week. Look to fade the edges with an upward bias until proven otherwise. Taking a look here at the ENQQ. Very similar price action right now. This one's trading 45% of ADR. Not quite inside day, but definitely trading in the upper half of Friday's range. Very, very clear bullish response after that strong pullback. We saw just a great move to new highs already. Again, given this overall strength and the bias of this trend here, any pullback this week could be met with another round of buying pressure until proven otherwise. We will get ourselves another FOMC key level on Wednesday afternoon, 1 o'clock p.m. the Central Time, 2 o'clock p.m. Eastern. The open price at that time will be the FOMC key level. Again, we could see a couple of days of muted price action with an upward bias, so that means fade new lows with an upward bias here until proven otherwise. But we may see a bit of quiet price action heading into that statement and that FOMC key level. Once we get that, again, we could see any pullback be an opportunity for a continuation higher until something changes. Taking a look here at crude oil. Today, you're seeing a very strong rejection, 3 a.m. Central Time. Very strong reaction from the lows. This thing rallying off the 70.61 level, 70.60, and rallied back to 72 very quickly. Now you're seeing a failed new low. You're seeing price hold the 70 level. So that's a key level right now. So you have a couple of levels here to watch out for early in the week. 70 right here. 70.27 is the midpoint of that impulse move, so that's the midpoint of the key range. So 70 is an important level here. The upper end of the range here, very important. And if we're going to fail or reject at this point, we may see price of crude rally back towards 74 to 75 half very soon. So keep an eye on this range and the current lows. Strong low here. So if price can overtake 72s here at some point, we may see further strength. Again, we will get ourselves another FOMC key level. The last couple of times here, price has pushed higher ahead of that FOMC key level. So for example, here's the FOMC and it moved higher into that point. The FOMC, I believe it's right here, it moved higher into that point. And back here it actually dropped. But that was the last drop before the recent one. We've had a big time push higher overall. So we'll see if we can hold 70. All right, let's take a look lastly here at gold futures. Now gold continues to hold the 1790 level. That's the key level to watch. It continues to be the key level here from a short-term basis. 1760 is that major market structure level. And then you have 1835 and the 1863 FOMC. So we have failed to see a bounce back to the FOMC from June here, and now we are 2 days from getting the new one. So in all likelihood we will form a lower FOMC key level here which could be indicative of further weakness here near term. But 1790 is the level to watch. If that one fails to hold, you more than likely come test 1760. And now if you can't hold that zone right there, then obviously you get further weakness into the next support levels down. So 1790, very important here early on. If it can hold that zone, hold that level, then 1790 to 1835 may play out as it tries to potentially push back toward highs. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.